Welcome along to the Deep Dive.
Great to be here.
This is Complete Aviation Solutions Deep Dive number 120. And today, our mission really is to cut through some of the noise out there.
Yeah, there's a lot happening.
Exactly. We want to bring you the most impactful shifts, the things really rocking the commercial aviation industry right now.
We'll be looking at some big investment plays.
Yeah, and also how global trade is, maybe surprisingly, hitting fleet expansions.
And those crucial strategic decisions airlines are making, shaping their futures.
So the idea is you get a concise but, comprehensive grasp of what's genuinely driving change in the skies.
Sounds good.
Okay, let's unpack this. First up, this fascinating story about Bain Capital, a major investment firm,
Right.
and how they've had this significant win that seems to have completely shifted their view on the whole aviation sector.
It's quite a turnaround in perspective for them, isn't it?
It really is. So their big move involved Virgin Australia.
Ah, yes, the IPO.
Exactly. They sold off 30% of their shares in that initial public offering late June 2025.
And the numbers are pretty striking. Tell us about that.
Well, that 30% stake, it sold for 685 million Australian dollars.
Which is what, about 446 million US dollars?
Precisely. And that figure, remarkably, tripled Bain's initial investment in the airline.
Tripled it. Wow.
Yeah. It's not just a win for Bain, though. It kind of sets a precedent, doesn't it?
How so?
Well, it sort of rewrites the rule book on the risk involved with distressed aviation assets. It signals this new, maybe more aggressive appetite from private equity.
Potentially reshaping airline ownership globally.
Could be. Unlocking value where, maybe others just saw problems, saw debt.
And it's interesting, despite that sale, Bain Capital still owns almost 40% of Virgin Australia.
Still the biggest shareholder.
Which really shows their continued commitment, I suppose.
Absolutely. And their success seems to have emboldened them. There was that quote from the partner who led the deal.
Right, saying they'd absolutely be up for it again. Yeah, in a different geography, in a different context, and we have got the skills to pull it off. That's confidence speaking.
And you mentioned they're already looking at India.
That's the intriguing part, yeah. Hints of future plays.
Okay, let's add some context here. Bain, with a couple of partners, they bought Virgin Australia back in 2020.
When it was in voluntary administration.
Right. They paid around 700 million Australian dollars, so 450 million US.
But, and this is key, they also took on a lot of debt.
A substantial amount.
Yeah.
5.15 billion Australian dollars.
Which is about 3.3 billion US dollars, a huge figure.
Mm.
So, looking at the bigger picture, it just shows how smart investment and really focused restructuring can turn things around, even with massive debt.
And that Virgin Australia fleet, it's quite diverse, isn't it? Around 117 aircraft.
Yeah, a real mix. You've got the Boeing 737s, the Nega 700s, the Nagaz 8s, a lot of NG 800s, 77 of those.
Plus some regional jets, Fokkers, Saabs.
And even 4 long-haul Boeing 777-300 ERs. That fleet wasn't just planes, it became a strategic tool.
Yeah, what do you mean?
Well, that diversity gave them operational flexibility. That was key to the turnaround. It shows sometimes a mixed fleet is more resilient than one focused purely on, commonality.
So it really begs the question, what does this signal for other airlines needing investment?
Exactly. And what's the future for private equity in this whole sector? It's certainly heating up.
Okay, so that's the investment angle. But what about when outside forces like geopolitics and trade hit airlines directly?
Yeah, that brings us to Horizon Air.
Right, the subsidiary of Alaska Air Group. They had a bit of a surprising delay with some new planes.
2 Embraer E175s, wasn't it?
That's right. And the key thing here, the deliveries were actually held up for a bit
Why was that?
because of tariffs the U.S. government put on Brazil, part of some wider trade negotiation.
Ah, so direct impact from trade policy onto aircraft delivery.
Exactly. The good news is the jets, N668QX and N669QX, they did get incorporated into the fleet eventually. June 27th, they're flying now.
But it highlights the fragility, doesn't it? The complexity of these global supply chains.
Absolutely. That direct link between, say, trade talks in Washington and Brasilia and an airline in the U.S. getting its planes.
It's fascinating. So currently, Brazilian imports face a 10% U.S. tariff.
That's the situation. Though Embraer can deduct the value of U.S.-made parts on its planes.
Right, and some of their business jets are actually assembled in Florida, which adds another layer, gives them some flexibility there.
And Horizon's fleet now, mostly these E175.
Yeah, 47 of them now with those 2 additions. They still have 3 more on order, but apparently not due in 2025.
Okay.
But this whole tariff situation, it sits within this wider context of pretty tense negotiations.
You mean the threat of even higher tariffs?
Potentially, yeah. There was talk, a warning even, about a possible 50% tariff on all Brazilian imports from August 1st if certain political demands aren't met.
50%. Wow.
It really shows how vulnerable these crucial aircraft orders can be to geopolitics. It's like a geopolitical chess game impacting the aviation nuts and bolts.
Even if companies say they'll stand by the manufacturer.
Well, yeah, some indicated they would, but a 50% tariff, that changes the economics significantly. It just underscores the complexity of global trade for aviation.
Okay, so we've seen investment shifts, trade impacts. Let's move now to cutting-edge aircraft and airline strategy. Wizz Air Malta.
Ah, the A321 XLR.
Exactly. Their first one has just arrived. This is the extra long-range version, really designed to push what a single-aisle plane can do.
A real potential game changer.
So the specifics. Tail number 9 HXLA, manufacturer serial number 12346.
Right.
It flew from Hamburg-Finkenwerder to Milan Malpensa on July 15th. Pratt & Whitney engines.
And the cabin configuration.
All economy, 239 seats.
That XLR really does open things up, doesn't it? For long-range routes using a narrow body.
That's the promise.
Allows airlines to connect new city pairs much more efficiently, lower costs, potentially tapping markets only wide bodies could reach before.
Huge potential for network flexibility and, cost savings.
Definitely. But there's a twist with Wizz Air here, isn't there?
There is. It's interesting because the airline hasn't actually said when they'll put this brand new advanced aircraft into scheduled service.
No firm date yet.
And what's more, plans they had for a new A321XLR route, Milan Malpensa to Abu Dhabi International, supposed to start June 2025.
Yeah.
Those plans were abandoned.
Abandoned. Huh. So they take delivery of the plane perfect for that kind of route, but scrap the route itself.
Seems that way. Makes you wonder what the strategy is.
It really does. And what's even more fascinating, maybe, is that Wizz Air Holdings, the parent company, is apparently in talks to reduce its total order for these A321XLR.
Reduce the order, even after taking the first one.
Yeah, they originally ordered 47, but this comes after they decided to dissolve their subsidiary, Wizz Air Abu Dhabi.
Ah, okay. So connecting the dots there.
It points to a very dynamic, maybe reactive fleet strategy, where even getting a new, highly capable aircraft like the XLR doesn't guarantee it fits into the network plan as things evolve.
So plans change quickly.
Very quickly, it seems. Wizz Air Malta itself has a large fleet, over 100 A320s and A321s, mostly the newer NEO and NX variants, so they're clearly committed to modern single-aisle jets.
The long-term role of the XLR in their specific network seems still a bit uncertain.
Exactly. It's in flux.
Okay, so wrapping this up, what does all this mean for you, the informed observer, keeping tabs on aviation?
Well, we've seen quite a range today.
We have. Private equity making these bold, successful moves in aviation, changing their whole outlook. Bain Capital being a prime example.
Right. Then the direct hit from global trade disputes, impacting something as fundamental as getting new planes delivered, like with Horizon Air.
Yeah, that was surprising. And finally, airlines constantly tweaking strategies, adapting orders, even with the latest tech like Wizz Air and the A321XLR.
Plans changing based on market shifts, dissolving subsidiaries. It's very fluid.
So the ripple effects are potentially huge.
Absolutely. And the crucial question this leaves you with perhaps is this. How is this interplay, investment confidence back on the rise, these ongoing geopolitical pressures, and this need for super flexible fleet planning? How is all that going to reshape the global aviation map?
Over the next few years.
Exactly. And what new opportunities might pop up from all this shifting ground? For airlines, sure, but also for passengers and for investors watching closely.
It's certainly going to be fascinating to watch.
No doubt about it.
Thank you for joining us for this deep dive today. We look forward to exploring more insights with you next time.